Good evening, or good morning, or good afternoon, whichever part of the world you are in. It's almost 9 p.m. India time, Saturday, 11th April 2026. And we are doing the India market review. We did not do one last week. A lot has happened. And well, let's jump in and see where things are as we do this review. Before we go ahead, just a disclaimer that this is not financial advice. This is for information and education purposes only. Kindly do your due diligence before you take any actions on your investments. We also do other market reviews, as you can see on the screen, on various topics and asset classes and across the world. So if you're interested, you know how to get in touch with us. The information is on the screen, and I look forward to hearing from you and feedback. Right. So as we speak, this is what is happening in the world. As you all know, there is apparently talks going on between Iran and US in Islamabad, Pakistan. And we still have a weekend left. Today is Saturday. Sunday, on Monday morning, we could be on a very, very different situation, something very positive, or who knows, there's a breakdown and a resumption of hostilities. We'll see. Anyhow, so with this in mind, let's look at what has happened in the market, and we're doing the India markets. So as you already now know, there's been a bounce in the markets globally, right? After the ceasefire announcement, there was a lot of back and forth about it. But as we've kept saying, or especially as technical analysis keeps saying, um, if you can just cut out the news, one of the things that has just been reinforced a lot for me in the last 2, 3 weeks is that if you can just cut out the news, if that's really possible, I'm not sure how, and just focus only on what the markets are telling you in terms of their price behavior, technical analysis, and you diligently were to follow, entries and exits as per charts, patterns only, irrespective of anything that would happen, you'll probably stand to benefit a lot. And I'm saying that because, well, going forward, maybe I'm going to talk less about the situation and more just focus on charts and what the charts tell us, right? So just putting that in context. So Nifty, as we all know, from around 23,300 has now gone to 24,050, right? So that's a clear 700-point bounce that has happened in less than a week. Of course, with the what's happening with the rest of the world. If you remember, in the previous IMRs, which we did almost about 2 weeks back, we talked about the bullish divergences that were appearing in many of the indices, especially not only the main index, which was not there about 3, 4 weeks back, but it started to appear, but also in more and more of the sector indices. So it's going to be sort of a review of what we discussed 2 weeks back, and then what panned out based on that. So Nifty has done definitely well, and of course that's a welcome relief to most of us. And if we look at the larger cap indices, just to make this crisp and short, look at the CNX 100 here, right? That's also done well. And if you observe the more recent moves in the just last few weeks, you're going to notice something, right? Let's see if you can see that. Um, Notice how the broad market, the CNX 500, 200, and 100, has actually done slightly better than the Nifty itself, right? I'm just looking at the last three candles on the screen, and you can see that Nifty versus the CNX 500, the CNX 500 is looking slightly healthier than the Nifty, the narrow market, right? So while the blue chips have done well, of course, basically in the Nifty, the broader market seems to have done actually much better, or definitely better. right? If we look at the indices for the individual indices which are categorized by the market cap, you will see that this outperformance is clearly there in the mid cap space and even in the small cap space, right? So the mid cap, small cap stocks have all done definitely much better than the large caps which are in the Nifty. So this is a point to be noted that the broad market and the mid cap, small cap have done relatively better in the uh, post ceasefire rise that has happened in the markets, right? So if you're looking for opportunities to dig deeper or you're looking at something more aggressive, then now you know where to look at, right? Now, moving on to the sectoral indices. If you remember, we had mentioned, various uh, the different behaviors between the different sectors. And let's look at the bank Nifty first. Let me go to all the different chart settings, which is daily on the middle of the screen. Top left is the monthly and the bottom left is the weekly charts, right, for the Bank Nifty index, right? So Bank Nifty going up more or less just like the Nifty has done. Actually, on the day of the ceasefire, it was good about 5.5, almost 6.5% up. It was a really spectacular bounce back that happened for the Bank Nifty, the gap up that happened, right? And then, and of course, I think we had a holiday last week, right? If you remember, we talked about the outperformance of the PSU banks versus the private sector banks. So if you look at the private sector bank index here, just observe how this has done and where the candles are positioned relative to the moving averages, right? Let me just get this clearer, right? There you go. Just to be simple. And if you look at the PSU Bank Index now, you can see that the PSU Bank Index has actually done much better technically than the private bank index. So if you go back and look at the IMR, the India Market Review that we did 2 weeks back, we clearly mentioned that the fall of the PSU banks was definitely less severe than the fall in the private sector banks, which is the index that you're seeing right now. And the recovery similarly in the PSU banks has definitely been better than the recovery in the private sector banks, just from a purely technical perspective, right? So the strength continues to pan out. So if you're looking again at relatively better setups, you probably look at in the banking space, you're looking at the PSU banks, right? Moving on to the other sectors, we do the banking in Nifty bank indices first because they are the heaviest weightage in the Nifty itself, right? CNX IT, as far as the sectoral indices are concerned, was the only negative index on Friday close, Friday the 10th of April. Everything else is showing green, as you can see on the screen. So you can really think about how the IT index, while definitely not out of the woods, it's actually still, in a sense, underperforming the rest of the market, though there has been a recovery. And as you can see, there's also a bullish divergence 2 to 3 weeks back. CNX Auto has recovered really well, right? So the auto stocks have shown tremendous strength and they continue to do so. Again, there was a bullish divergence which was there, just reaffirming something that we had already been discussing. So just observe that sector after sector index, when it shows strength, and then did the market know the ceasefire was going to happen? I don't know. Uh, but this is what the market wisdom, basically, which is embedded in technical analysis, can tell us. It cannot tell you what and when, right? But can tell you that something is happening and something is cooking, and that's what we basically want to pay attention to, right? So that's the beauty of technical analysis, the beauty of charts, right? So you can see that this divergence, bullish divergence, had actually extended for a longer period of time, a few more days. Pharma, right? If you remember, we said that, it had not really fallen. If you remember, unlike the other indices, you can see that on the weekly chart, the war and the conflict really did not affect the pharma. But as far as the recovery is concerned, well, the recovery is also not great. I mean, this is a bit of a uh, shift here in the sense that this is no longer being looked defensive sector for sure, but when the recovery is happening, the action is in the other sectors, right? So that's something to keep in mind. Metal index almost back to its life high, right? So an amazing recovery in the metal index. And again, from a correction perspective, it did not correct and break down like the other sectoral indices have. So sort of a triple top forming there on the CNX metal index. Just be a little cautious there. But if it were to break out, I mean, definitely there are metal stocks that are making new life highs as we speak. Or on Friday they did, on Thursday they did, right? I'm not going to be talking about individual stocks here, just for regulatory reasons and just to keep things safe, right? So the metal index showing fantastic strength of all the indices we've done so far. This one is definitely the strongest, which is there, right? The commodity index, a bit of a mixed bag, the commodity space, but still good to know. Good recovery, right, along with the metal index. FMCG, well, as you can see, it's actually quite a laggard, right? It's been beaten down for quite some time. FMCG was on a downtrend for almost 2 years, right? Seems to have formed a bottom. Definitely, it's not in any hurry to go back up. I suspect from a fundamental perspective, there could be much, much better valuations that one could look at as in the FMCG space. And if anybody wants to do that, and if you do that, and you find something interesting, yeah, do get in touch and let's discuss that further, right? Coming to the energy space, what is interesting, let me go to the weekly chart here, is this sideways move that has been there since, say, March 25, right? Really sort of a triple, quadruple top at around 37,100 on the CNX Energy Index. If this breakout happens, which looks likely, right? Looking at the volume which is there, looking likely, sort of a 1.5 year consolidation, and not much of a breakdown as far as the war is concerned. So the constituents of the CNX Energy Index need a closer look, and they could give you some really good really good setups for a nice up move in the next 1 to 2 months, right? CNX Infra, all right, somewhat of a recovery, not much of a fall, it seemed, right? And here again, there was a bullish divergence which was there. Just reiterating what we discussed in the previous IMR 2 weeks back, that the market was showing signs of a recovery that was building up or pending in the market, right? Uh, the realty index also up, but again, a laggard, not like the metal space, right? Not like the auto space. Got a long way to go. The realty index, even from looking at the monthly chart here, from a long-term perspective, has a long way to go to even come back to its life high of 2008, right? Had done a really good recovery in the last 5, 6 years post-COVID, and then there's been a correction. And maybe this is the correction that it needed, because if you look at it from a technical perspective, the strong support, which is from 2009, okay, resistance has become a support, and from there the realty index has bounced up, right? Though there was not really a strong, there was, okay, I missed this. There was a bullish divergence there also. So this divergence is, I think that's the highlight or the lesson to be taken, that when you keep seeing them in sector after sector or stock after stock, you need to sort of, take stock. Of course, the problem is that if you are in, say, this phase of the market and the market is, falling all around you like this, right? Remember that this time, if I've removed the last 5, 6 days of data, going down, 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 can you put the how many of us have the courage to put the money down on a divergence and then go ahead from that? Remember, everything is a probability. There are no certainties. The market could have fallen another 5, 10, 15, 20%, depending on what had happened then, right? But coming back to what I opened this IMR with is that if if you just can remove all the noise and the news and the headlines and just focus only on charts, then what is possible, right? So just reiterating that point, we move it to, yeah, so this is the current state of affairs. And then coming to media, not much of a strong index, but yeah, it's there. So we talk about it. And that also had a bullish divergence and has gone up. What is interesting is this sector, right? I had done a review before I started the IMR, the central public sector enterprises, right? Have a look here. Really good space that is from 24 coming back to that space, almost the life high in now April 26. So that's about 2 years. You could not really a double top yet, but it's getting there. And if this breaks out, now this is really interesting because on the one hand, you have all the economic problems with the higher oil prices, how it's going to affect the economy, et cetera, et cetera, et cetera. But well, the markets are the markets and the charts are the charts, and it's clearly saying something, right? What you want to do with it is really something to be uh, thought about carefully, right? But are there opportunities? Well, the charts seem to suggest so, right? And what's interesting is that it is the public sector companies that are actually showing this sort of resilience despite all the challenges which are there right now. Um, as the central public sector enterprise is relatively better than the general public sector enterprise, which includes state government setups, right? And of course, those of you who have noticed will also notice that this is very much in line with how the CNX energy index also looks, right? Looking at the MNC index, right? Quite a bit of a correction with the PSU index did not have, right? And then quite a recovery too, right? Uh, just looking at, if you go back and look at all these charts, this 1 week candle, this has just been a spectacular move, 5 to 10% moves in 1 week is what has happened on most of the sector indices, right? Okay. And then looking at lastly, the service index, well, just nothing much to speak about, right? So just to summarize, some really good recoveries in the metal space, in the auto space, right? The laggards definitely are in the FMCG, in the IT space, and the realty space has really taken an excellent support from a 2009 level, right? Before closing, up moves likely to continue. That's what technically the suggestion is, right? So the Nifty at 24,500 or even 25,000 next week. All depends on, again, the setup is good, right? The probabilities purely technically are bullish, right? But yeah, events are events, and those are, well, can't be ignored. So if you are trading even purely technically, you have your stop losses in place, depending on what your approach technically is, and you uh, follow that very strictly, right? So all in all, an excellent recovery. Before closing, just to make a point here that so today, before doing the IMR, I had looked at also global markets, the Nasdaq 100 stocks, etc. Some very interesting findings. And what I just want to close this IMR with is that, of course, there's been a good recovery in the Indian market and all, but the Indian market is lagging behind a lot compared to many other global markets. Many of the global markets have recovered much, much more than the Indian equity market. So those of you who are global investors or have a global perspective, that is something that you should definitely be looking at. We will have market review of the global equity markets. That will be a separate webinar that hopefully will be done tomorrow, Sunday, 12th of April. So do look out for it. In the meantime, we're going to put this up. So thank you very much for tuning in and listening. If you have any questions or queries, love to hear from you. Collaborations, inputs, ideas, suggestions. Like I said, there are market reviews on a whole set of other classes, asset classes, plus equity markets. So have a look and stay in touch. Thank you very much, and I'll see you in the next webinar. Right? Mokari Maka.